All right, are you ready to dive into the crazy world of day trading? We're going to unpack your recent interest in this, and with all those notes you sent over, it's clear you're not messing around.
Definitely seems like someone's been doing their homework.
You got it. Thankfully, you also flagged this super intense YouTube live.
Oh, yeah, that was a roller coaster.
It was from this trader, goes by ICT,
Michael Huddleston, right?
You got it, Michael Huddleston. It was from September 27th, and man, he did not hold back.
Not one bit. What I found fascinating was how ICT doesn't just tell you what to do, but when to pump the brakes. Like, hey, sometimes the best trade is the one you don't take. New traders, they often miss that part, you know.
Totally. They're itching to jump in, guns blazing.
Oh, yeah, they just want to be in on the action. But ICT, he's all about avoiding these things he calls high-resistance liquidity days. You ever driven on, like, a back road with those deceptively deep potholes?
Oh, totally. Those ones that can swallow your car whole.
Exactly. Looks tempting to drive through, but spells disaster. These trading days are the same thing.
And the thing is, even after, 30-plus years of trading, ICT admits these days still get him.
Oh, yeah. He's definitely not immune.
He actually shared how early in his career he lost a ton because he didn't recognize those setups.
Yeah, that's got to sting a bit, you know. Makes you realize everyone's learning, even the veterans.
For sure. And it really highlights the core message here. It's about shifting from reacting to anticipating.
Huge difference.
Yeah.
Huge.
ICT argues that certain days, they aren't just normal supply and demand, It's almost like it's orchestrated manipulation by bigger players. He even calls them they, trying to trap unsuspecting traders.
And the best part, he uses the NASDAQ on September 27th, the day of the live stream itself, as a prime example.
So meta, it's like he's narrating the market manipulation in real time. Okay, so to spot these high resistance days, ICT uses this awesome analogy of the potholes on a familiar road.
I love that analogy.
Right. The more you drive it, the more you learn to anticipate and avoid them. Makes sense.
Brings total sense. He even says they actively try to trigger stops, use these misleading patterns to load up on positions. And who gets caught in the crossfire? Often the less experienced traders.
It's like a high-stakes game of chess, and the average trader is out there playing checkers.
Sadly, it's true. Which is where understanding the true nature of the market, how it really works, becomes absolutely crucial. One of ICT's key tools for this is identifying what he calls fair value gaps. He makes it sound so mysterious, right?
Okay, yeah, let's unpack this fair value gaps thing. He makes them sound super important.
They are. He describes them as these, like, price zones with hidden stories, and he emphasizes that on high resistance days, the price tends to get stuck in these gaps. Yeah, it revisits them multiple times instead of just, breaking through decisively.
So are these fair value gaps? Are they like support and resistance levels?
They're related, but not exactly the same. You think of them more like zones where the price should behave a certain way based on recent activity.
Okay, I kind of get it.
And if it doesn't, if it keeps bouncing around inside the gap, red flag for ICT, that's when he thinks, okay, something's fishy. The market might be manipulated.
And to make matters worse, he says that even his normally reliable PD arrays get thrown off on these high resistance days. For those who don't know, PD arrays are kind of like these time-based trading zones he uses. So even his go-to tools aren't foolproof in these conditions.
It's like the market throws out the rule book on those days. He even calls out those YouTube gurus who try to sell these losing setups as classic moves. Talk about frustrating, right?
Oh, I bet. You can totally hear the frustration in his voice in that live stream.
Totally. Like he's genuinely trying to steer people away from these pitfalls.
He uses this one example where the price forms what looks like a textbook bull flag, the kind you see in all the beginner books.
Oh, yeah. Classic bull flag.
But it's actually a trap. I bet countless new traders fell for that one.
Oh, I'm sure they did. And that's precisely why he stresses the importance of journaling and brutal self-honesty. He even admits he used to struggle with this early on.
Really?
Oh, yeah. Said he'd get stressed, have digestive problems, even started hating life because every trade felt make or break.
Wow, he was so caught up in the emotional roller coaster that he lost sight of the bigger picture?
Exactly. And that's why he's so passionate about helping others avoid those same pitfalls. So what's his solution?
Well, he talks about carrying a dummy wallet.
Yep.
Just in case you get mugged. Right.
Yep.
Minimize the damage when the odds are against you.
Love that analogy.
It's so simple, but so powerful, right?
Totally.
And his advice for those high resistance days, it's really clear.
What's he say?
Either sit on your hands, stick to paper trading, or drastically cut your position size.
Yeah.
It's about protecting your capital, but also your sanity.
Right.
He actually says trading during these crazy times,
Yeah.
it's like picking a fight with a prime Mike Tyson.
Ooh.
Why risk it?
Why would you?
Better to save your energy,
For sure.
for when the odds are in your favor.
Totally.
And that brings us to another key concept
Okay.
that ICT emphasizes, and that is shifting your mindset
Yep.
from chasing every opportunity to patiently waiting
Right.
for the right ones.
It's hard to be patient.
And he actually uses this term,
Yeah.
gambler's numbness,
Wow.
to describe that kind of desperate urge
Yeah.
to make back losses.
It's so easy to do.
Oh, it is.
Especially after like a tough loss. You just want to get back in there.
You just want to hit that green button again.
Totally.
And it often leads to even more impulsive decisions.
Absolutely.
It's like that old saying,
Yeah.
throwing good money after bad.
Oh, it's so true.
Exactly.
It's like the hair of the dog, right?
Yeah.
Like trying to cure a trading loss with another risky trade
Right.
just makes the problem worse in the long run.
It's the same thing.
Yeah.
Instead of chasing those quick wins,
Yeah.
ICT wants traders to adopt a more strategic, like business-like approach.
Oh, interesting.
He even suggests holding like regular board meetings
Okay.
with yourself,
I like that.
analyzing your performance, identifying weaknesses,
Right.
planning your next move.
Like a true CEO
Yeah, like a true CEO
of your own trading.
of your own trading empire.
Right.
He wants you to look at your trading account
Hmm.
as a Fortune 500 company.
Not a slot machine.
Not a slot machine, exactly.
Right.
And just as a smart CEO wouldn't jump at every business opportunity,
Right.
a smart trader should learn to recognize when the market isn't conducive to their style.
Totally. Yeah.
Sometimes the best move is no move at all.
It takes discipline, though.
It does. It really does.
Most new traders don't have.
They don't have it yet.
Right. Yeah.
But, that's why we're here, right?
Exactly.
Learning. Always learning.
Always learning.
And ICT stresses the importance of recognizing
Yeah.
those potholes on the trading road ahead of time, especially on those high resistance days. And that's where his insights on fair value gaps and reading price action become really valuable.
So it's not just about spotting those gaps, but understanding how the price behaves around them.
You got it.
Gotcha. What else should we look out for?
Well, he points out that on these high resistance days, the price might repeatedly touch the edges of these fair value gaps,
Yeah.
but never truly break through.
Interesting.
And he uses this analogy of a Rorschach test. What you see in the market often reflects your own internal biases
Oh.
and desires, not necessarily the objective reality of the situation.
So we see what we want to see,
Yeah,
even if it's not there.
exactly.
Gotcha.
We might convince ourselves that, a breakout is imminent,
Right.
even though the price action is screaming otherwise. He also talks about how these high resistance days often lack the kind of precision that you'd normally expect in the markets.
Precision.
Yeah, he says, the price doesn't hit those key levels with its usual accuracy.
Right.
It's almost like something is interfering with the natural flow.
Like those larger players?
That's exactly who he's talking about.
Yep.
There's, the they
Yeah.
that he keeps mentioning.
The puppet master.
To puppet masters.
Yeah.
And trying to fight against that kind of manipulation, he says, it's like trying to outswim a rip current.
It's a losing battle.
You're going to get pulled out.
Yep.
And he actually points to these specific examples on the NASDAQ chart,
Oh, really?
showing how the price bounces around erratically, triggering stops.
Creating that chaos?
He's basically saying that instead of trying to fight the current on these high resistance days,
Yeah.
you can try to ride these little waves of manipulation.
Okay.
So it's like grabbing a quick snack while
Right.
the sharks are circling.
I love it. I love it.
You got to be quick.
Gotta be quick.
In and out.
In and out.
He shows how the price might briefly, run stops above or below these key levels, and it creates these little quick opportunities.
Right.
But he warns against getting greedy.
Right. Don't get greedy.
Take your profits and get out.
Right.
Don't overstay your welcome.
Exactly.
And remember that dummy wallet analogy?
Oh.
Even with turtle soup trades, ICT recommends drastically reducing your position size.
Smart.
It's all about minimizing risk and protecting your mental capital.
He's basically saying, don't bet the farm on a game you might not win.
You got it.
Right.
And if you're feeling unsure, he even suggests switching to a demo account
Right.
or paper trading just to practice,
Yeah.
Refine your skills without risking real money.
Makes sense.
He wants traders to view these kind of high resistance periods as opportunities to learn and adapt,
Oh, interesting.
to level up their game.
Like training with weights.
That's a great analogy.
Yeah, you don't just start with the heaviest one right away.
Right, you got to work your way up.
You build up to it.
Exactly.
Yeah, I like that.
And speaking of strength, ICT makes a point of saying there's no shame in admitting when you don't know something
Right.
or when you need to take a step back.
Love that.
He encourages traders to even say, I don't know, out loud.
Right.
To kind of acknowledge their limitations and to embrace that learning process.
It's so true.
It's refreshing to hear a trader of his caliber talk about humility, you know?
It is.
Continuous learning.
Absolutely.
He's not trying to portray himself as some kind of, trading guru with all the answers.
Right.
He's just a guy who's been in the trenches,
He's been through it.
made his fair share of mistakes.
We all have.
And he's learned some valuable lessons. And he's not afraid to share those lessons, warts and all,
Which I appreciate.
in the hope that it might help other traders avoid some of those same pitfalls.
Yeah, I mean, he even challenges those YouTube influencers.
Oh, I know. He's got no problem calling them out.
Those ones that make it look easy.
Right.
Yeah,
Making trading look like a cakewalk.
it's not.
It's
Man, no.
definitely not.
He says they're doing a disservice to the community by
Oh.
promoting these unrealistic expectations.
Oh, for sure.
He's not afraid to call out the BS in the industry.
He's all about empowering traders
He is.
with knowledge and skills.
Not selling them pipe dreams.
Right?
He wants traders to understand that trading is hard.
Oh, it is.
It takes dedication, discipline, a willingness to kind of confront not just the market.
But yourself, your own ego.
Yeah, that's the hardest part sometimes.
It is.
Absolutely.
And to remember that it's a marathon,
It is.
not a sprint.
Long game.
Long game, for sure.
Exactly.
And sometimes the best way to win that marathon is to pace yourself.
I like that.
Conserve your energy, know when to, take a break, refuel.
Take a step back.
For sure. Which brings us to this crucial point that ICT made. Sometimes it's not just algorithms moving the market, it's straight up human intervention.
Yeah, that's a tough one for some traders to grasp.
I know, right?
They think it's all ones and zeros
Right.
driving the show.
But sometimes
There's a human
there's someone behind the curtain
literally controlling
pulling the strings, and that's when you see those high resistance days.
Right.
It's those disruptions and those patterns.
Yeah, he even uses the word precision. Like normally you see the price hit these certain levels and it's almost predictable, you know? And then all of a sudden, boom, things go haywire. The price action gets erratic,
Yeah.
almost like it's being influenced by emotion rather than like cold, hard data.
It's like those moments in a movie when the hero realizes they're dealing with like a mastermind,
Oh, yeah.
someone who's always one step ahead.
Right.
And you know what? ICT says those moments are often about those bigger players trying to accumulate these large positions.
Interesting.
They'll trigger stops. They'll create those fake breakouts.
Right.
Anything to shake out the weaker players.
So it's not just about algorithms. It's about psychology, too. It's about understanding how these bigger players think,
Exactly.
Yeah.
And trying to outsmart them, especially on those high resistance days, it's like you're going to get crushed.
It's a recipe for disaster.
Exactly. So what's the solution?
Well, what's he say?
ICT's advice is simple, man.
Yeah.
Recognize those situations.
Right.
Get out of the way.
Get out of the way.
Reduce your risk.
Right.
Switch to paper trading or just step back and observe.
Right.
Don't try to outsmart the manipulators. Outweight them. Live to fight another day.
Love it. That's great.
And remember, trading, it's not about winning every battle.
All right.
It's about winning the war.
The long game.
The long game, exactly.
Yeah.
It's about preserving your capital, preserving your sanity for those times when the odds are in your favor.
I like it.
Which brings us back to the key takeaway from this whole deep dive. It's learning to identify those high resistance days, those moments when the market is primed for manipulation.
Right. So just to recap here, what are some things that we should look out for?
Remember those fair value gaps. Watch how the price behaves around those.
Right.
If it gets stuck, if it keeps revisiting those levels without a decisive break, red flag.
Big red flag.
And if those PD arrays, those, time-based trading zones, if they start getting wonky,
Yeah.
that's another warning sign.
Gotcha. Okay. So those are the times when we really want to tighten up our risk management.
Exactly. And whatever you do, don't get seduced by those textbook patterns, those bull flags and pennants that look so tempting on paper, because they're often traps. especially in these environments.
especially in a high-resistance environment.
Right.
Got it. Noted.
And instead, consider those turtle soup trades. Remember, they allow you to profit from the market's volatility without taking on too much risk.
Right, you don't need to win every trade. You just got to win more than you lose.
Exactly. And most importantly, keep that dummy wallet mentality. Reduce your risk, focus on preservation, and treat those high resistance days as opportunities, man. They're opportunities to learn, to refine your skills, and prepare for those more favorable trading environments.
Yeah, he really hammered home that point of risk management.
Yeah.
Like, he wants us to develop this sixth sense for danger in the market.
He does. He does. And you know what? Developing that sixth sense starts with, self-awareness. Remember what he said about journaling?
Oh, yeah, journaling's huge.
It's not just about, tracking your trades. It's about understanding you, your psychology, your strengths, your weaknesses, your triggers.
Right, become a more conscious trader.
It's about becoming a more conscious, a more deliberate, more intentional trader.
I like it.
And you know what? I think that's a great place to wrap up this deep dive.
Absolutely, this was a good one.
We went deep into ICT's world, exploring this unique perspective that he brings on market manipulation, on risk management, the psychology of trading. It's all connected.
So much great stuff in there. And, you're right. It all comes back to understanding yourself as a trader.
100%. And that's something that everyone listening can start doing today, right now.
Absolutely.
So that's it for this deep dive. We'll catch you on the next one.